Shiba Inu has entered a phase where a major Asian regulatory door has swung wide open, but the chilling presence of extreme fear has returned to the wider market. The green list approval from the Japan Virtual and Crypto Assets Exchange Association positions this asset alongside industry titans like Bitcoin. Analysts are dropping their alerts. Whales are moving silently. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The current price action of Shiba Inu is trapped between bullish fundamental news and a prevailing bearish technical structure. As of 17 November 2025, Shiba Inu is trading at 909 units, experiencing a slight daily rebound of close to 1.25%. However, the token remains down by over 10% on the weekly chart, reflecting a broader retreat from earlier November highs. This volatility is set against a critical backdrop. The entire crypto market, including Bitcoin, has entered a phase of extreme fear, marking a sentiment score of 10, the lowest since July 2022. This fear is dampening the impact of significant positive ecosystem developments. The most significant event impacting Shiba Inu's legitimacy and long-term price trajectory is its official inclusion in Japan's Green List by the Japan Virtual and Crypto Assets Exchange Association, or JVCEA. This development, confirmed on the 12th of November 2025, places Shiba Inu alongside established tokens like Bitcoin and Ethereum, effectively elevating it from a purely speculative meme coin to a legitimate pre-approved crypto asset in one of the world's strictest regulatory environments. Crucially, this inclusion positions the token to benefit from a proposed Japanese government plan to cut the high crypto gains tax rate from 55% down to 20%. The market views this as a potential unlock for large retail and institutional capital inflows from Japan, significantly boosting liquidity. Despite the profoundly bullish regulatory news from Japan, the short-term market reaction has been mixed, largely due to macro crypto weakness. Data shows Shiba Inu's market cap hovering around $5.2 billion, with a 24-hour trading volume of approximately $149 million. The token has been consolidating within a tight range of 889 units and 927 units since the 15th of November, desperately trying to form a price floor at the 880 units level. Research firm 10x noted that the current market slump is accelerated by shifting Federal Reserve rate cut expectations and thin liquidity across the entire market, causing major tokens to extend losses alongside Bitcoin. This indicates that while the domestic Shiba Inu narrative is strong, it is currently being overpowered by broader global risk-off sentiment. Technically, Shiba Inu is facing substantial resistance. The token is trading below all key exponential moving averages. Specifically, major resistance zones are noted at 1,040 units, which represents the daily 50-day moving average, and 1,230 units, the daily 200-day moving average. Technical indicators show a dominant bearish sentiment, with the Relative Strength Index, or RSI, hovering in the oversold territory. Conversely, this oversold condition, coupled with the Crypto Fear and Greed Index hitting extreme fear, can often signal a potential market bottom before a reversal, according to analysts. Separately, on-chain data shows a notable bullish signal from large holders. Close to 207 billion Shiba Inu, valued at approximately $1.85 million, were withdrawn from exchanges on the 16th of November, suggesting a long-term accumulation trend and reduced immediate selling pressure. The prevailing analysis suggests a technical correction is running its course, but fundamental catalysts are building up for a potential end-of-November rally. Analysts, citing the new partnership with Unity Nodes for telecom utility, argue that Shiba Inu is evolving beyond its meme coin identity, strengthening its long-term outlook. The successful integration into Japan's regulatory framework acts as a powerful de-risking factor, differentiating it from other meme assets. However, caution is raised that a breakout above the key technical resistance of 1,050 units is essential to trigger a 20% rally. Failure to breach this level would keep the price pinned, risking a 15% drop toward the October low of 750 units. The implication is that the last 2 weeks of November will be a battle between regulatory-driven adoption and bearish technical overhead. The Shiba Inu community, often referred to as the Shib Army, reacted with strong enthusiasm to the Japan Green List announcement. The official Shiba Inu Token X account highlighted the news, explicitly mentioning the proposed tax drop as a potential huge catalyst. This community engagement remains a core strength. However, the ecosystem's Layer 2 blockchain, Shibarium, is showing mixed performance. Reports state that daily transactions have seen a significant 54% drop to around 3,490 in November, an issue largely attributed to the broader market stress. For the token's value to sustain a long-term recovery, the developer team must accelerate utility adoption and successfully implement security fixes following the August 2025 bridge hack, rebuilding confidence in the Shibarium network. For the remainder of November, Shiba Inu's price action is forecasted to be range-bound, yet volatility remains high. Short-term predictions suggest a consolidation phase around the 900 units level. Price forecasts anticipate the price hovering between 850 units and 1,050 units, with a necessary break above 1,050 units to challenge the daily 50-day moving average at 1,230 units. The long-term outlook, spanning the next 3 to 3 years, is significantly bolstered by the Japanese regulatory approval and ongoing utility expansion. Forecasts suggest a multi-year peak for 2026 could reach as high as 4,000 units, but this depends entirely on a sustained Shibarium recovery and a positive shift in the general crypto market cycle. The core risk for Shiba Inu remains its concentrated ownership and dependence on overall market health. While whale accumulation is a short-term bullish sign, the concentration of 41% of the supply in the hands of large holders poses a volatility risk should they decide to exit abruptly. The extreme fear sentiment shows that market fragility is high, and any minor negative news could trigger a rapid sell-off. Investors must balance the highly positive long-term fundamental news, such as the Japan Green List and utility build-out, against the immediate technical headwinds and the token's persistent nature as a volatile, sentiment-driven meme asset. So, here is the new reality. Shiba Inu is now fighting the broader market's fear while holding the most powerful regulatory card in its history. Will the weight of Japan's potential tax cut push the price past that critical resistance, or will the chilling market fear pull us back toward the October lows? November's closing weeks will deliver a clear answer. This is not financial advice. Do your own research, follow the data, and trade wisely. Stay focused, Shib Army. The day is over now. Remember to give it a big thumbs up to see our most recent material. Share it and subscribe to the channel.